Okay, today I'm putting out this video to actually explain, give us a breakdown on the trade I took on GBPUSD earlier today. Yeah, so looking at this chart, you see that the market has been bullish, at least from the beginning of the week. We knew that we are buying GU for the week based on how we trade. Looking at it on the line chart, the most recent break of structure is bullish, so we are looking for buyers throughout this week on GU. Yeah, so um I came into the market today, this morning, and then let me quickly cut this back. Looking for the bullish continuation, looking for a bullish continuation to the upside. At least from what we've seen in recent times, we understand that this market has been making this kind of move: higher highs, higher low, higher highs, higher low, higher high, and potentially we're looking to get a new low that will put forth a high. So we're looking to get on that move and continue to the upside. Yeah, so now based on how we trade, I understand. Okay, let me go back to the 15 minutes actually, because this trade was off. The logic was on the 15 minutes. Yeah, so I understood that okay, this low here is a strong protected low on the M15. I'm not expecting for this low to be swept. Yeah, so and then all of these stuffs here, this low, this low, this low, were all internal range liquidity based on how we trade. Now we are just looking for price to come into the range, grab internal range liquidity, and then continue to the upside. Okay, and then this for that, there are some lows that are high probable for price to take out. Like in this case, this low here did a stop hunt and a break of structure, so invariably many are actually waiting for price to come back and then buy from maybe this other block here and then continue to the upside. But then, so what I was trying to say is that this low has a lot of liquidity resting below it, a lot of stop loss. Those are trying to buy here has a stop loss placed here. A lot of persons are looking for this low to hold, but then understand that this low is now an internal range since price has taken out the external range. So price is coming for liquidity that rests be within the range, and this low is also part of it. So I'm looking to get an entry below this low, because I understand that a good number of persons are waiting to buy within this low, and then with their stop loss below this low. So their stop loss is going to be my entry. Yeah, so marked out the low that we're looking now. This low alone can be used as an entry, no point of interest. You just maybe place your buy tool here, and a good stop loss size, maybe something here, and then you can just buy from there. Yeah, so that low there was our target, where we wanted to see price take out that low and then we'll buy. Now we want to see a point of interest that is resting below the low on a higher time frame from 1 hour upwards. So I went up to the 1 hour. I was looking for something that is exactly below that low, and then I saw this level here. Okay, I was interested in this level because it was just that low was fed into it. I was also looking out for the 4 hour to see if there's something else I could see. So on the 4 hour, sorry, on the 4 hour, there's a 4 hour open close level that's aligned perfectly with that 1 hour point of interest. Yeah, so that's a good one there, makes the whole stuff high probable. So I was just looking to buy from that point there. Sorry. So placed now, like I said, in most cases, that's what I sent out to my signal group was the buys I sent was actually placed here, because in most cases price might just sweep this low, never mitigate this level, and then keep buying. I didn't want to miss out on this move by any chance, so I placed my entry at this low, and then the stop loss went above this low here, slightly above the low, and then I'm just targeting a fixed R, 3R. But then the overall target is for price to take out the external risk liquidity, which is that high. Yeah, so but 3R is my target, by the way. Okay, so now it's time to is now for us to wait for price. Wait for price. Now you notice that price got into that point of interest and then started giving reactions. Yeah, started giving reactions just to lure people in. And then what price did was, bam, he swept the low. Just look how he did. He swept the low immediately and then shot up to the upside. It rallied up, yeah, and then at some it started reacting off some point of interest that could lead to reversal. I sent it out that, okay, protect your positions, but I personally left mine open because I understand that, okay, price might still come back and then mitigate this unmitigated POI and continue to the upside. So price gave profit, took it back, and then it mitigated that level properly, took out some persons on break even, and then started going for the upside. It rallied straight into take profit. Bam. So that was it at 3 hours. So that was the whole idea behind the trade. GBPUSD. Simple logic. Yeah, so drop your questions on the comment section.